In a world where technology is advancing at lightning speed, cryptocurrencies have emerged as a game changer in the financial world. What was once a niche, almost mysterious concept is now shaking the very foundation of traditional finance. But how exactly are these digital currencies changing the way we manage and exchange money? And why are they becoming so important in our modern financial landscape? Let's dive in and explore how cryptocurrencies are disrupting the traditional financial systems we've come to rely on. To understand how cryptocurrencies are making waves, let's first take a look at the financial systems we use every day. Traditional finance has been built on centralization. Banks, governments, and financial institutions control how money flows, how it's exchanged, and even how we can access it. Want to send money to a friend across the world? You'll probably rely on a bank or a service like PayPal, which means waiting for approval, paying fees, and often dealing with slow processing times. But there are a few problems with this system. For one, it can be slow, expensive, and sometimes inaccessible, especially for people living in remote areas or developing countries. It's also vulnerable to fraud, censorship, and even systemic failures. And with billions of people around the world still without access to proper banking services, these limitations are starting to feel more and more like obstacles. Enter cryptocurrencies, a new wave of digital money built on blockchain technology. Cryptocurrencies like Bitcoin, Ethereum, and countless others are decentralized, meaning they don't rely on banks or governments to function. They work on a peer-to-peer network, allowing transactions to occur directly between users with no middleman. This gives people more control over their own money and how it's used. But what exactly makes cryptocurrencies so special? Well, it all comes down to a few key principles. First, decentralization. Unlike traditional money systems that rely on a central authority, cryptocurrencies operate on a distributed network of computers. This means no single entity can control the currency or manipulate transactions. Second, we have security. Blockchain technology, the backbone of most cryptocurrencies, ensures that every transaction is recorded in an immutable, transparent ledger, making it incredibly hard to alter or hack. Then there's transparency. Every transaction on a blockchain is open and visible to anyone, which can help reduce fraud and increase accountability. And of course, cryptocurrencies enable peer-to-peer transactions. People can send and receive money without relying on intermediaries like banks. It's faster, cheaper, and more efficient. Speaking of efficiency, let's talk about the advantages cryptocurrencies offer over traditional systems. For starters, transactions are often much faster. While banks can take days to process international payments, cryptocurrencies can settle transactions in minutes or even seconds. And the costs? Well, cryptocurrency transactions typically come with much lower fees compared to traditional banking. That's because without intermediaries, there's less overhead and fewer middlemen taking a cut. Cryptocurrencies also offer more financial inclusion. Around 1.7 billion people around the world are unbanked, meaning they don't have access to basic financial services. Cryptocurrencies provide a way for these individuals to participate in the global economy using just a smartphone and an internet connection. Now, the impact of cryptocurrencies isn't just limited to finance. Blockchain, the technology that powers cryptocurrencies, has applications far beyond digital currency. Take supply chains, for example. Blockchain can track products from manufacturer to consumer, ensuring authenticity and reducing fraud. In healthcare, blockchain could be used to securely store and share medical records, making it easier for doctors to access critical patient data while maintaining privacy. And in real estate, blockchain could streamline property transactions, cutting out costly middlemen and making property ownership more transparent and accessible. Of course, it's not all sunshine and rainbows. Cryptocurrencies still face several challenges. One of the biggest hurdles is volatility. Cryptocurrency prices can fluctuate wildly, making them risky for investment and everyday use. There's also the regulatory uncertainty. Governments and financial authorities around the world are still figuring out how to regulate cryptocurrencies. Some countries have embraced them, while others have imposed strict bans or restrictions. And while blockchain technology is incredibly secure, cryptocurrencies are not immune to hacks and fraud. In fact, several high-profile crypto exchange hacks have shown that security is still a major concern. Despite these challenges, cryptocurrencies are already making a big impact. Decentralized finance, or DeFi, platforms are revolutionizing how people borrow, lend, and earn interest on their digital assets, all without needing a bank. Crypto payments are also growing rapidly. More and more businesses are accepting digital currencies as a form of payment, from large companies like Tesla to small online stores. And let's not forget NFTs, non-fungible tokens, which are disrupting the art, gaming, and entertainment industries by providing a way to prove ownership and scarcity of digital assets. So, what does the future hold for cryptocurrencies? While there are certainly challenges to overcome, the potential is undeniable. As more people, businesses, and governments adopt blockchain technology, cryptocurrencies are likely to become an even bigger part of the global financial system. We might see further integration into everyday life, with crypto wallets replacing traditional bank accounts, and blockchain becoming the standard for securing everything from contracts to identity. Ultimately, cryptocurrencies are pushing us toward a future where finance is more accessible, more efficient, and more transparent. The question isn't whether cryptocurrencies will disrupt the financial system. It's how they will reshape it for the better. Thanks for tuning in. If you found this video insightful, make sure to like, share, and subscribe for more content on the latest trends in technology and finance. Until next time, keep exploring the future.